Welcome back, everyone. We have an update from Citizens Inc. Trades on the New York Stock Exchange under the symbol CIA. It's a diversified financial services company providing life, living benefits, and final expense insurance and other financial products to individuals and small businesses in the U.S., Latin America, and Asia. Welcoming back President CEO John Stenberg and CFO Jeff Conklin. Welcome, gentlemen.
Well, thank you.
All right, floor is yours.
All right. Well, great. Well, you might notice that we're a little bit more casually dressed than normal. We're having I think it's only the second offsite the company's ever had in its 50 plus years of experience, and we're just kind of getting away from it all so we can focus on making sure we button down our coming year's strategy on our domestic U.S. growth strategy, our South America, Central America, and Caribbean growth strategy, and then very importantly our emerging Asian growth strategy. So quick introduction to who we are. So we're Citizens based in Austin, Texas, and we have a location in Puerto Rico where we get a lot of our premiums from our international business from. We do a lot of business in South America, a lot of business in Taiwan. We've got about 250 employees that represent, I think at last count, like 27 different countries of birth. So we understand we're in a lot of markets and a lot of different cultures and languages, and so we have our employee force that represents that level of diversity also. We have clients in 75 countries, as a matter of fact. Now, the number of independent agents that can sell us is over 8,000 now, and the number of producing agents is 3,000, which is a dramatic growth over just 2 years ago, and I'll talk a little bit about that. 1.7 billion in assets, and our in-force revenues from all of our in-force block of business from the last 50 years is about 2/3 international, 1/3 U.S. domestic. But it's really interesting, in 2024, 2/3 of our sales came from the United States, and 1/3 of our sales came from international. And the reason is a good reason. It's not because we had a bad year internationally. We actually had a great year internationally. But we were actually the fastest growing mature life insurance company in the United States in 2024, with tremendous growth. So I'll just mention very quickly, our goal is to make ourselves a tremendous opportunity for investors by providing kind of the best of both worlds, the stability, safety, and predictability of a life insurance company in the United States with a company that has years and years of tremendous growth opportunity in front of us, with international reach and tremendous opportunity to grow here in the United States. So we feel that's kind of the best of both worlds in terms of an investment opportunity. So I think I'll wrap it up there, and we can open it up to Q&A, unless, Jeff, you want to say anything? Nope. Go to Q&A.
All right, John, thank you. All right, so talk about your most important drivers of growth. What are they domestically and internationally?
Well, internationally, we changed our strategy a little bit to really reinforce our deep relationships with longstanding partners, and it is really paying off. They were up 16-18% last year, and they're already having a great year this year. Domestically, though, as I mentioned, is where the growth was. And that's been from the dramatic expansion from a few hundred agents to thousands of agents across the United States. We're in 43 states so far, and the District of Columbia. That'll eventually be 49 states. And we entered the domestic final expense market, and that's where our growth has been in 2024. And there are other areas of growth in the United States looking forward in the future. We can go certainly up market to upper income markets, and broaden our product portfolio into investment products, and also perhaps health and living benefits products also. So domestically in the United States, we have a lot of growth opportunity.
Wonderful. And speaking of growth, despite this 49% growth in first year premiums and continued agent expansion, your first quarter net income was lower relative to the year ago period. So what are your operational priorities to increase revenue and margin expansion, and what's that timeline?
That's a great question. So we have a growth imperative. We're a small company. with the desire to be a large company in the future. So in life insurance, if you enter a new market, you have to incur the expenses in that first year to service that market, to add the agents, to appoint the agents, to build commission systems, to build the products. So I call it build the factory. You have to build the factory to service this new market that you were never in. So in your first year, you only have the revenue from sales in that first year, but you have the expenses of the factory. But in 10 years, we don't have to build a new factory. It's the same factory. Our expenses shouldn't really have to go up. But in the 10th year, you're going to have the revenue from sales in the 10th year, plus 9 years of renewal premiums that you'll have the advantage of getting. So it really grows and stacks on each other. So I would say that another reason is we had great success in selling endowments 20 years ago, and it's 20 years later, and we're very, very happy to make good on our commitments that we made to those clients 20 years ago. But a lot of those 20-year endowments overseas are coming to maturity, and so we're paying those out. So replacing that revenue is another reason why we really have to focus on growth right now, and that's exactly what we're doing. That's our imperative.
And with that, Leah asks, what's your current exposure in Asia? What percentage of your business is there? And what's your competition like over there?
So Asia, I just came back from Asia. About 10% of our in-force revenue comes from Asia, and that's Taiwan. And it is phenomenally high quality business. We love those clients. We love the business. It's great business, but it's only Taiwan. And Asia really represents the future 2 decades of growth in our company. So our imperative this year, I'll just take a step back real quick, is to solidify our growth plans in South America, in the Caribbean, in Central America, getting into countries like where we don't have a lot of exposure, like El Salvador, Belize, Honduras, Guatemala, and then 2026 is really going to be focused on driving growth into new countries in Asia. We're looking at Hong Kong, Thailand, Indonesia, maybe even partnerships in Japan and Korea. So there's a lot of opportunities we have. We haven't made any decisions there yet, but that's actually why a reason we're here in this offsite today, to get away from everything and really start working on those plans for our Asia expansion.
And so besides demographic expansion growth, how is the growth with current clients? Example, like once you sign a client, what does that look like? What is that process? What's the revenue stream like?
Well, right now, currently, historically, I should say, it's kind of one and done. You get a client, they buy your product, and we service that client as well as we can to keep that client in force until they either die or the policy matures, depending on the kind of product. But we are definitely looking at product expansion into asset growth kinds of products, living benefits. And so part of our future strategy is to have more than one product to have a client own. And so that's another way for us to grow, is with the same client. So get more agents, get more clients, and then be able to sell more to each client and allow each agent to sell more across their portfolio.
And so when it comes to different products, how many products do you have in each category? Are you adding categories?
Yes, as I mentioned, I kind of bucket products into 3 categories. Okay. Life insurance, and there's a lot of different types of life insurance, and we plan on expanding the types of life insurance we have. There's also investment-focused products, which could be a life insurance product designed specifically for asset accumulation in a tax-advantaged way. There's also annuities, and then there's also what I mentioned, living benefits. So that might be a cancer product or hospital indemnity, a disability product, a linked benefit product. There's lots of opportunity for growth in that category also. So it just comes back to the fact that we have, literally the world in front of us and so much expansion opportunities in front of us in product category, geographic, ability to service clients with more than one type of product.
Great. Well, always great news on your end. Thank you for this update. Congratulations. And we'll just continue on this conversation. Thank you, John and Jeff.
Great. Thanks so much.
All right, everyone. We'll be right back.